Sir, very happy afternoon to all. So, we are doing financial management. In that FM, financial management, we have completed the revision of first one, cost of capital, capital structure theories, arbitrage process, then EBIT, EPS analysis. The next one, sir, after the EBIT, EPS analysis, indifference point, then leverage analysis. We are pending with, sir, ratio analysis, dividend decision, capital budgeting, and working capital management. In today's session, we are going to knock off ratio analysis. Yes. So the chapter ratio analysis classified into 5 categories. Number 1, liquidity ratio. Number 2, leverage ratio. Number 3, profitability ratio. Number 4, overall profitability ratio. Number 5, TAP ratio, which is turnover ratio, activity ratio, performance ratio. So chapter ratio analysis classified into 5 categories. Number 1, liquidity ratio, leverage ratio, profitability ratio, overall profitability ratio, TAP ratio. Sir, the leverage ratio again classified into 2 categories, capital structure ratio and coverage ratios. Sir, first we are going to talk about liquidity ratio. What are the types of liquidity ratio a firm has to check? Number 1, current ratio. Number 2, quick ratio, liquid ratio or acid test ratio. Absolute cash ratio, basic defense interval, working capital ratio. The first one is a current ratio. You know, the purpose or the objective of the liquidity ratio is to check the liquidity of the business. Liquidity of the business. For example, suddenly sundry creditors is coming and asking money. At that time, we can't say that, sir, the money is in fixed deposit. The fixed deposit will mature after 1 month or 6 months or 1 year. You come at that point of time, that will not be applicable. So, how much, sir, current assets I am having to meet the current liability is what the current ratio. So, how much current assets I am having to meet the current liability is what the current ratio. So, current ratio is equal to current asset divided by current liabilities. Next one, inside this current asset, there are 2 types of current asset will be there. Soft current asset and hard current asset. Hard current asset in the sense means it will take more time to convert into cash. Soft current asset in the sense means it will only take less time to convert into cash. So how much current, sir, quick asset I am having to meet the current liability is what the quick ratio or the liquid ratio or the acid test ratio. So quick ratio, liquid ratio or acid test ratio. How much quick asset I am having to meet the current liabilities. How much quick asset I am having. So how much current asset I am having to meet the current liabilities is what? Current ratio. Sir, how much quick asset I am having to meet the current liability is what? Either quick ratio or liquid ratio or acid test ratio. Come to absolute cash ratio. Even in this quick asset, sir, hard quick assets are there and soft quick assets are there. Hard quick assets are, still it will take even more time to convert into cash. So absolute cash ratio means I will see only cash. That's what cash plus marketable securities divided by current liabilities. Cash plus marketable securities divided by current liabilities. So absolute cash ratio is equal to cash plus marketable securities divided by current liabilities. So what is, sir, 3 ratios? Basically 3 ratios are there. Current ratio, quick ratio, absolute cash ratio. Every ratio is checking only one criteria. To meet my current liability, to meet my current liability, to meet my current liability, how much current assets I am having, how much quick assets I am having, how much cash plus marketable securities I am having. That's what the liquidity ratio. Basic defense interval. Simple. If you are having 5,000 rupees in your hand, daily you are spending 500 rupees. For next 10 days, nee tension agavindi avasiyam. That's what basic defense interval. How much quick asset I am having. For example, 5,000 rupees is my quick asset. and 500 rupees is the cash expenses per day, I can say that my basic defense interval is 10 days. Sir, what is working capital? After the, sir, once we discuss the working capital management, we can say that, sir, working capital is equal to current asset minus current liabilities. That is the amount which I am going to in my business in various short-term assets are called as current asset. Sir, the amount the outsiders are going to invest in my business are called as current liability. So my investment minus outsiders investment is called as working capital. Are you really with me? These are the main ratios. So logically understand current ratio. Current ratio is equal to current assets divided by current liabilities. What is its interpretation? How much current assets I am having to meet the current liabilities. What is quick ratio? How much quick assets I am having to meet the current liabilities. What is absolute cash ratio? How much cash and marketable securities I am having to meet the current liabilities. Basic defense interval means, sir, I am having this much of quick asset. How many days it will run without disturbance divided by cash expenses per day. Working capital means current asset minus current liabilities. I am coming to the leverage ratios. There are two types of leverage ratios are there. Capital structure ratios and coverage ratios. Because leverage, as we already discussed in the last session, that sales minus variable cost contribution minus fixed cost EBIT. Actually, the analysis from EBIT, sales to EBIT is the costing subject. Are you really with me? From the EBIT, I have to pay the interest. Sir, from EBIT minus interest, I will get the EBT. From the EBT, I will get the tax. I will pay the tax. Then I will get the PAT, profit after tax. From the profit after tax, if I reduce the preference dividend, I will get the residual earnings. Divided by number of equity shares, I will get the EPS, which is earnings per share. Sir, in the balance sheet, liability side, I will be having equity share capital. For this equity share capital only KE, I will be having reserves and surplus. This is what KR. I will be having debt. This is called as KD. Sir, if I inject debt into the capital structure, sir, my status itself will change. From all equity company, I will become a levered firm. So because of that, my capital structure got affected. That's what capital structure ratio. Sir, if I inject debt into the capital structure, if I inject preference shares into the capital structure, automatically fixed financial cost, sir, will come into the picture. Then I have to take care of the coverage ratio. So that's what I'm going to do. First one is debt ratio. That means, my dear lovable students, debt plus equity, I am totally having 100. Out of 100, 30 rupees is my debt means, sir, the debt ratio can be said it as 30%. Simple. Out of the total fund, how much is the debt? How much portion is the debt? That's what debt ratio. Debt divided by total fund. That means, out of 100, if 30 is debt, automatically 70 will be equity. That's called as equity ratio. So equity ratio means equity divided by total fund. That is 70 divided by 100. Out of my 100 rupees total fund, 70 rupees is my equity. That is called as equity ratio. My dear lovable students, debt equity ratio means debt divided by equity. Debt equity ratio means debt divided by equity. That means 30 rupees is the debt and 70 rupees is the equity, means 3:7 is what my debt equity ratio. That means if I am having 7 rupees equity in my capital structure, 3 rupees is the debt. That's what debt equity ratio. Because I am talking about capital structure. I am talking about capital structure. Mainly in my capital structure, I will classify the capital structure into debt and equity. Right, sir? So out of the debt plus equity is the total fund. Out of my total fund, how much is the debt is what the debt ratio. Out of the total fund, how much is the equity is the equity ratio. What is the relationship between debt and equity is what the debt by equity. Right, sir? I'm coming to the capital gearing ratio. Sir, because of injecting debt into the capital structure, because of injecting preference shares into the capital structure, automatically, my dear lovable students, automatically, sir, the equity shareholders will be having some benefit. Automatically, equity shareholders will be having some benefit. Yes, sir, because for the debt, I have to pay only fixed KD. For the preference, I have to pay only fixed KP. So since I have to pay fixed KD and fixed KP, sir, equity shareholders will have trading on equity. Equity shareholders will have favorable financial leverage. Are you agree with me? Sir, because of including preference shares and debt in the what structure? Capital structure. Equity shareholders is having benefit. So what is the gearing portion? Preference share capital plus what? Debt. So because of including these two guys in the what structure? Capital structure, equity shareholders are getting benefit. So that's what? Preference share capital plus debt divided by equity shareholders fund. This is called as capital gearing ratio. Proprietary ratio, proprietor, sole proprietor means owner. Out of the total asset, how much is the owner's fund? That's what? Proprietary fund divided by total asset. Sir, if proprietary fund is 30%, remaining 70% should be debt. That's what? Debt to what asset ratio? Total asset ratio, which is nothing but debt fund divided by total assets. So out of total asset, how much is proprietary fund is what? Proprietary ratio. Out of total asset, how much is the debt fund is what? Debt to total asset ratio. Coming to fixed asset to long-term fund ratio. Because generally, we will not pay immediately money and buy the fixed asset. Generally, we will take term loan to buy the fixed asset. That's why such a ratio we are calculating. How much fixed asset we are having and sir, how much long-term fund. For example, I am having long-term fund of 100 crores and I am having fixed asset of 500 crores. Sir, I am having higher fixed asset. Higher fixed asset. Are you really with me? These are the main capital structure ratio. That means don't say the ratio, say the relationship. Out of the total capital employed, how much debt is there? That is called as debt ratio. How much capital employed? How much equity is there? That is called as the equity ratio. Sir, what is the relationship between debt and equity? Is what? The debt equity ratio. Sir, because of the presence of the preference share capital and debt in the capital structure, what is the equity? How much is the equity shareholders fund? That's what the capital gearing ratio. That means preference share capital plus debt divided by equity shareholders fund is what the capital gearing ratio. Out of my total asset, sir, how much fund belongs to the proprietor is what the proprietary ratio. Out of the total asset, how much fund belongs to the debt holders is what the debt to total asset ratio. Sir, always, sir, fixed asset, I will be buying by taking loan. So what is the relationship between fixed asset to long-term fund is what? Fixed asset to long-term fund ratio. That's it. Sir, if you inject debt and if you inject preference shares into the what structure? Capital structure. My dear lovable students, sir, surely, sir, I am liable to pay interest. Surely, I am liable to pay preference dividend. These are fixed commitments. What commitment? Sir, if you are having fixed commitment, you should ensure that the organization will never face difficulty to pay the interest and the preference dividend. That's why I'm very concerned about the coverage ratio. First one is debt service coverage ratio. Debt service, my dear lovable students, the return on investment is the EBIT, earnings before interest and tax. But this EBIT is not only available to the debt holders, this will be available to the debt holders, this will be available to the government, this will be available to the preference shareholders, and this will be available to the equity shareholders. I'm talking about debt service coverage ratio. So out of EBIT, how much money I can use to serve the debt is what I should take as numerator. That's why earnings for what service? Debt service. I cannot take EBIT because I am not, sir, going to consider the equity and preference. I'm going to consider only the debt. So the earnings available for debt service divided by interest because this is what I'm going to pay, plus installment. Generally, I will pay the installment from my PAT, profit after tax, because it's a principal repayment, right, sir? So it will be after tax item. Sir, earnings for debt service is a before tax item. Interest is a before tax item. Installment divided by 1 minus 3 is also a before tax item. It's a after tax item. I should convert into before tax item. That's why divided by 1 minus t. So the debt service coverage ratio is equal to earnings available for debt service divided by interest plus installment divided by 1 minus t. Right, sir? Then coming to the interest coverage ratio. You know, sir, EBIT minus interest, you will get earnings before tax. One thing is very sure, I will pay the interest from EBIT. Are you really with me? For example, if I am having EBIT of 1 lakh and I am liable to pay interest of how much? 5,000. That means 1 lakh divided by 5,000 is equal to 20 times is what my interest coverage ratio. Sir, if I am having interest coverage ratio of 20 times, no need to worry at all. Because my company is in very safe position. Because, sir, if EBIT comes down by 1 or 2 times, no need to get tense. Because my coverage is 20 times, my dear lovable students. Coming to preference dividend coverage ratio. Sir, from the EBIT, we will pay interest. We will get earnings before tax. From that, we will pay the tax. We will get the PAT. From the PAT only, we will pay the preference dividend. So, how much PAT I am having to pay the preference dividend is what the preference dividend coverage ratio. For example, my PAT example is 1 lakh and PAT, sir, preference dividend is 10,000, my dear lovable students. 1 lakh divided by 10,000, 10 times coverage I am having. So, if 1 or 2 times, if the PAT falls, sir, no need to worry at all because my coverage is 10 times. That's why PAT divided by preference dividend. Fixed charges coverage ratio. Fixed charges. That means I will consider, sir, what is the money available to meet the, sir, fixed charges. If you see, my current ratio is equal to current asset divided by how much current assets I am having to meet the current liability. So my current liability with regard to debt is interest and installment. But installment is a post-tax item. So I'm converting that into pre-tax item. Now the interest also become pre-tax item. This also become pre-tax item. Right, sir? Sir, basically in the numerator, how much money available with me? That means sales minus variable cost, contribution minus fixed cost is EBIT. Am I right, sir? This EBIT is after fixed cost. This fixed cost consider cash fixed cost and non-cash fixed cost. Non-cash fixed cost like depreciation. Depreciation is a non-cash item. So, EBIT would have been reduced, but cash component would not have been reduced. That's why to this EBIT, I am adding back the depreciation. Are you really with me? Then I will get EBIT plus depreciation, which is nothing but cash flow from operating activity. Cash flow from operating activity divided by basically, sir, this is cash flow from financing activity. Cash flow from operating activity divided by cash flow from financing activity is what the fixed charges coverage ratio right, sir? So my dear lovable students, the first coverage ratio, debt service coverage ratio, that means in order to serve the debt, how much, sir, resource I am having. Sir, not cash I am having, how much earnings I am having. Earnings means after depreciation, correct? So earnings available for debt service divided by interest plus installment divided by 1 minus t. Interest coverage ratio, from where I will pay the interest, EBIT. That's why EBIT divided by interest. Sir, preference dividend coverage ratio means in order to pay the preference dividend, how much PAT I am having is what preference dividend coverage ratio. This is fixed charges what ratio. This I am analyzing from the cash angle, not from the earnings angle. That's why how much cash I am having, that is EBIT plus depreciation, to meet the interest plus installment divided by 1 minus t. Are you really with me? So fixed charges coverage ratio we are analyzing from cash, and debt service coverage ratio we are analyzing from profit or earnings. Are you really with me? I'm coming to the profitability ratio, my dear lovable students. Everyone knows that GP ratio is equal to GP divided by sales into 100. Sir, the opposite of GP, because sales can be classified into 2 categories, GP and cost of goods sold. Sir, if the GP is GP divided by sales into 100, cost of goods sold means cost of goods sold divided by sales into 100. Right, sir? That means if GP is 100, sales is 100% and GP is 30%, 70% will be the cost of goods sold. So the formula for cost of goods sold is cost of goods sold divided by sales into 100. Right, sir? These both are, sir, dealing with the trading account. Are you really with me? Coming to the profitability of the P&L account, we are having net profit. In P&L account, we will consider the tax. Are you really with me? So the net profit will be considered before tax and also after tax. Are you really with me? Sir, it's like before food and after food sugar checking, my dear lovable students. So net profit before tax divided by sales into 100 and net profit after tax divided by sales into 100. Generally, net profit before tax will always be higher than the net profit after tax, right, sir? The difference between net profit before tax and net profit after tax, the difference will be tax. Comfortable? Financial expenses ratio. Sir, as a concern, we are supposed to incur so much of financial expenses, like, sir, I have to pay interest, I have to pay discount on sir, debt, I have to pay premium on redemption of debentures. So many financial expenses I have to incur, the expense relating to finance. So how much percentage I am incurring? So financial expenses divided by sales into 100. It does not include loss due to theft, goods destroyed by fire and all, because these all are abnormal item. Include only the normal item. Are you really with me? Now, very important, man, operating profit ratio. My dear lovable students, sales minus variable cost, contribution minus fixed cost, NIT. EBIT, sir, from sales to EBIT is what? Operating leverage. And EBIT is otherwise called as operating profit. EBIT is otherwise called as operating profit. What profit? So that's why, so operating profit ratio means operating profit divided by sales into 100, or rather technically EBIT divided by sales into 100. Comfortable? So we are having one income ratio and expenses ratio. Sir, gross profit ratio bar cost of goods sold ratio. GP ratio, GP divided by sales into 100. Cost of goods sold ratio, cost of goods sold divided by sales into 100. Net profit ratio. Sir, net profit is there in the P&L account and financial expenses are also there in the P&L account. So net profit ratio, net profit divided by sales into 100. Financial expense ratio, financial expense divided by sales into 100. Operating profit ratio. Sir, operating profit or EBIT divided by sales into 100. The opposite of operating profit is the operating cost. Operating cost. You should understand one thing. Operating cost is equal to cost of goods sold plus, because this cost of goods sold will be there in the trading account, right? In your P&L account, two expenses will be there. Number one, operating expenses and non-operating expenses. So cost of goods sold plus operating expenses is called as operating cost. Operating cost. So operating cost ratio is equal to operating cost divided by sales into 100. So operating profit or the opposite, the operating cost. Coming to the PV ratio, marginal costing, we are specialized in that. Sir, contribution divided by sales into 100. Sir, sales minus variable cost contribution. Sir, contribution divided by sales into 100 is called as profit volume ratio. Coming to variable cost ratio, variable cost divided by sales into 100. Variable cost divided by sales into 100. Comfortable? I'm coming to the overall profitability ratio. Overall profitability ratio. Sir, till now, I was simply talking about the normal profitability ratio. GP ratio, gross profit divided by sales into 100. Meaning, out of sales, how much percent is gross profit? How much percent is gross profit? Sir, what is cost of goods sold ratio? Out of sales, how much percent is the cost of goods sold? Net profit ratio, how much out of sales, how much percent is the net profit? Sir, financial expense ratio, out of sales, how much percent is the financial expenses? Operating profit ratio, out of sales, how much is the operating profit? Operating cost ratio, out of sales, how much is the operating cost? Sir, profit volume ratio, out of sales, how much is the contribution? Sir, variable cost ratio, out of sales, how much is the... That means every profitability ratio is attached with sales. Every profitability ratio is attached with. I'm moving into a very important calculation called as, sir, overall profitability ratio. What ratio? Overall profitability ratio means, sir, I am going to check the return on investment. I am going to check the return on equity and I am going to check the return on asset. So basically return divided by investment, return divided by equity and return divided by asset. Sir, if you check the profitability ratio, I took GP, I took cost of goods sold, I took NP, I took financial expenses, I took operating profit, I took operating cost, I took contribution, I took variable cost, everything from the P&L account. That is both numerator and denominator are from the P&L account. So the comparison between two P&L item, but in overall profitability, I will consider P&L and balance sheet. For example, return will be P&L item and investment will be balance sheet item. Are you really with me? So basically this is going to be a P&L divided by balance sheet. Sir, return on investment. Sir, simple sir. Sir, Sales minus variable cost, contribution minus fixed cost, EBIT, right sir? This EBIT is the return before tax. Before you are paying tax, this is the return of a business. So pre-tax return on capital employed. What tax? Pre-tax. Before you are paying tax, company is earning EBIT. Sir, in order to enjoy this EBIT, company have invested what and what? Equity. So EBIT divided by equity plus debt. So which is nothing but, man, sir, return on investment is equal to return divided by investment. What is the return before tax? EBIT. Sir, what is your investment? Debt plus equity. That's it, game over. Sir, if it is post-tax return on investment, sir, post-tax is equal to return divided by investment. Investment will not change. What and what? Equity plus debt. After paying tax, sir, interest we will get, right? Debt holders will get interest and equity shareholders will get PAT. So basically the return will be PAT plus interest divided by equity plus debt. Divided by equity plus debt. I am coming to return on equity. Sir, look at here, man. We know we are having EBIT. From the EBIT, if you reduce interest, you will get EBT. Minus tax, you will get the PAT. From the PAT, if you reduce preference dividend, you will get the residual earnings. Divided by number of equity shares is what? EPS. Are you all really with me? So my dear lovable students, sir, my question is, what is the return on equity? Residual earnings, sir. Preference dividend, sir, or PAT. What is the return? For equity shareholders, residual earnings is the return, right, sir? Sir, what is pre-tax return on equity? Sir, which is return divided by equity. Denominator will be equity. Sir, profit before tax. Profit before tax. Look at here. Profit before tax. Because from profit before tax, I am only paying what? Tax. Then I am paying only preference dividend. Correct. So, post-tax means after payment of tax. PAT is the return, I can say, for NSR after paying tax divided by equity. So two things we done. Number one, return on investment and return on equity. Sir, like this we can consolidate. Sir, you try to say return on investment classified into two categories. Number one, pre-tax and post-tax. What is the return pre-tax? EBIT divided by investment, debt plus equity. What is the post-tax? Interest plus PAT divided by debt plus equity. That's it, game over. Sir, return on equity classified into two categories. Number one, pre-tax and post-tax. Comfortable? Sir, for a equity shareholder, pre-tax is the profit before tax divided by equity. And post-tax is PAT divided by equity. Comfortable? Yes. A return on asset, sir. Sir, assets will generate EBIT. Assets will generate EBIT. So the pre-tax return is EBIT divided by average total asset. Comfortable? Post-tax, sir, assets will generate what? PAT divided by average total assets. Are you able to appreciate, sir? That's it. So the next one also done. The third one also done. The third one is a return on asset. A return on asset classified into two categories, pre-tax and post-tax. What is with regard to pre-tax? EBIT divided by average total assets. What is with regard to post-tax? PAT divided by average total assets. PAT divided by average total assets. Comfortable? Sir, what is sir, based on EPS and dividend? Super, sir. Sir, as we all know that sales minus variable cost contribution minus fixed cost EBIT. From that EBIT, pay the interest. You will get the earnings before tax. Pay the tax. You will get the PAT. From the PAT, we will pay the preference dividend. Right, sir? Then you will get the residual earnings. This is the earnings available to the equity shareholders. Divided by number of equity shares is what this portion is what they are asking. EPS means residual earnings divided by number of equity shares. Sir, if EPS is 10 rupees, my dear lovable students, company will not give the entire 10 rupees to the equity shareholders. Out of this 10 rupees, if company gives only 6 rupees as dividend, total equity dividend 6, sir, sorry, total dividend, for example, they have given 60,000 rupees total dividend. Total dividend declared during the year is 60,000. And company is having 10,000 equity shares. 60,000 divided by 10,000 comes to 6 per share is the DPS. Is the DPS, dividend. So what is the EPS? EPS is equal to 10. What is the DPS? That means out of how much rupees earned? 10 rupees earned. Company give a 6 rupees dividend. So 6 divided by 10 into 100 comes to 60% is the dividend payout ratio. That's what DPS divided by EPS into 100. Comfortable? Sir, as a shareholder is investing in any company for return. Yes, sir. So for a shareholder, the yield means return. Yield means what? So from the angle of the shareholder, the return what you are getting is DPS. DPS. In order to enjoy this DPS, he has to invest today's MPS. So this is called as yield. Yield means what? Return. Are you all with me? Return means return by investment. Right, sir? A return divided by investment. This is from the angle of the shareholder. So this is the yield of the shareholder. Yield of the shareholder is equal to cost of the company. That's what K. K is equal to DPS 1 divided by MPS 0 into 100. Exactly tallying. Are you all with me? Sir, earnings yield means, sir, the shareholder is not looking for dividend. Shareholder is looking for earnings. Earnings. So according to him, EPS is the return. In order to enjoy the EPS, he has to invest MPS. So EPS divided by MPS into 100. That means this is nothing but KE under the earnings price approach. This is under dividend price approach. So you know you are able to appreciate, right, sir? That's it. Coming to the based upon market ratios. Price earning ratio. Sir, price earning ratio means price divided by earnings. Price earning ratio. Price divided by earnings. What price? Market price. Divided by what? Earnings. For example, sir, my share is having an EPS of 10. Sir, and market price is 100. That means 10 times. A share who are generating an EPS of 10 is having a value of 10 times in the market. That's what price earning ratio. Book value per share accounting formula, which is nothing but net worth divided by number of equity shares. Are you really with me? Yes, sir. Sir, how much the company is having what? Net worth. Net worth in the sense means company's asset, which is nothing but assets minus liabilities is equal to net worth. For example, if you take balance sheet, here you will be having total asset, here you will be having liabilities, right, sir? Total liabilities. I'm talking about liabilities. Sir, from the total asset, if I reduce the liability, I will get the net worth. Net worth is nothing but the equity share capital plus preference share capital plus reserves and surplus something, etc. So this net worth divided by number of equity shares will give you book value per share. It will give you book value per share. Comfortable? Then, my dear lovable students, market value to book value means, sir, book value is, for example, 10, but market value is 50. The reflection, the market reflection is 5 times. Are you all with me? If I am seeing the reflection based on EPS, then it is price earning ratio. If I am seeing the reflection based on my book value, it is market value to book value. That's it. That's it with regard to that area also. Comfortable, sir? I'm coming to the, sir, TAP ratio, which is nothing but working capital management. Which is nothing but working capital management. Because in working capital management, sir, there will be raw material. That raw material will be converted into WIP. That WIP will be converted into finished goods. That finished goods will be converted into debtors. And that debtors, sir, I have to pay off, right? This raw material would have been supplied by creditors. And from this debtors, I will get cash. And this cash will be repaid to the creditors. This is called as working capital cycle. This is called as working capital cycle, right? For example, my dear lovable students, what is working capital cycle? Sir, in capital budgeting, I can say that I have to go and purchase a plant and machinery by investing 50 lakh. How I am going to invest in a 50 lakh rupees plant and machinery? The same way, in order to run my business, I have to invest in raw material. I have to invest in WIP. I have to invest in finished goods. I have to invest in debtor. I have to invest in cash. And certain investment will be bared by outsiders, called as creditors, called as, sir, expenses, employees, called as, sir, expenses outstanding. So I am going to look raw material turnover ratio. Raw material. I am going to check the performance of the raw material. You just tell me, my dear lovable students, after I invest in raw material, this is what actually happening. The factory can be classified into 3 categories. Inside the factory, you will be having 3 places. Number 1, stores. Number 2, work area. And number 3 is the warehouse. Number 3 is the warehouse. Sir, after you invest money in raw material, if the raw material are there inside the stores itself, that means it's bad. Very bad. What is the performance of the stores is what the raw material turnover ratio. What is the performance of the work area is what the WIP turnover ratio. What is the performance of the warehouse is what the finished goods turnover ratio or stock turnover ratio. Right, sir? So how to check the performance of the raw material that is stores by checking raw material turnover ratio? Basically, generally, I will tell you, any turnover ratio, what man? Any turnover ratio is equal to turnover divided by that particular item. Are you really with me? That means with this available resources, how much turnover I generate. That's what turnover ratio. With this available resources, how much turnover I generate. That's what my performance. My performance means turnover. Alright, sir. Sir, if my business is having turnover of 500 crores means, wow, that shows your performance. I am saying only but there is no turnover. That means you don't have performance at all. Are you really with me? So, generally, sir, any turnover ratio means turnover divided by that particular resource. With this available resource, how much turnover I generate? For example, I will show you. Look at here, man. Capital turnover ratio. Capital, which is nothing but turnover divided by capital employed. For example, I made capital employed of 100. I made turnover of 500. Means, wow. That means my turnover is 5 times of my capital employed. It's showing good. I invested only 100. Sir, next one. Fixed asset turnover ratio. Fixed asset turnover ratio is equal to turnover divided by fixed asset. Are you totally with me? That means or that shows that with the resources of fixed asset, how much turnover I made. Are you really with me? That shows my performance. Sir, I'm having 100 rupees of fixed asset. I made 1000 rupees turnover. Wow. I made turnover of 10 times of my fixed asset. Generally, turnover ratio means turnover divided by resources. With this much of resources, how much turnover I made. Right, sir? Yes, sir. Working capital turnover ratio, which is nothing but turnover divided by net working capital, which is nothing but, sir, I have invested this much net working capital. With this much working capital, how much turnover I made? For example, 100 rupees is the working capital I have invested. Sir, why you have invested 100? That's what working capital management chapter, right, sir? Which is nothing but current asset minus current liabilities. There we will be talking about estimation of working capital. Am I right? With this, if I make 2000 rupees as turnover, that means 20 times. Wow. That means with the available resources of 100, I made, sir, 20 times as turnover. Brilliant. Now, sir, raw material, sir, I will not sell the raw material. I will consume the raw material. I will, sir, WIP, I will not sell the WIP. I will incur the cost for WIP. Finished goods, I will sell the finished goods, but my dear lovable students, the sales include profit also, right, sir? Debtor means, sir, it is connected with the credit sales. It is connected with the creditors means it is connected with the credit purchases. What raw material turnover ratio. So here I am seeing that this is the analysis I am going to make. What is the performance of the stores? Performance of the stores. For example, sir, working capital turnover ratio is equal to sales divided by interpretation. With this much of working capital, I made this much of sale. So my resource available is the working capital. So I am comparing my sales with the working capital. Clarity. For example, fixed asset turnover is equal to fixed asset divided by, turnover divided by fixed asset. Are you really with me? Turnover divided, sales divided by fixed asset. So with this much amount of fixed asset, how much turnover I made? So the resource available is what? Fixed asset. Inga raw material turnover ratio means I can't take sales divided by raw material because I will not sell the raw material. I will consume the raw material. That's why raw material consume divided by stock of raw material. But I will be having opening stock of raw material and closing stock of raw material. That may be different. I am not interested to take either the opening stock nor the closing stock. I will take the average stock of raw material. That means this average stock of raw material is the resources. Yes, sir. With this resource, how much times I have consumed the raw material. It shows if it is, sir, if the performance is good, it will be showing multiples like 5 times, 10 times, 12 times, 13 times. Are you really with me? Coming to WIP turnover ratio. WIP is related to my factory work area. There I will not sell the raw material. I will not consume the raw material. I will be incurring all the elements of cost such as, sir, material, labor, overhead, everything. Right, sir? So my dear lovable students, factory cost divided by average stock of WIP. Average stock of, sir, with this much of resources, average stock of WIP, how much, sir, factory cost I have incurred? That shows the performance of the WIP, because this is TAP ratio, either turnover ratio or activity ratio or performance ratio. With regard to, sir, finished goods turnover ratio or stock turnover ratio, what I have to take generally is the sales divided by average stock of finished goods, right? Sir, actually finished goods is for sales only, but sales include profits. Profit, sir, profit is an extra amount which I am getting as a return. That will not mark my performance, right? So I will not take sales. Instead, I will take the cost of goods sold. That's why cost of goods sold divided by average stock of finished goods. Average stock of finished goods. Comfortable? So tell me, what is raw material turnover ratio? Cost of raw material consumed divided by average stock of raw material. WIP turnover ratio. Factory cost divided by average stock of WIP. Finished goods turnover ratio. Cost of goods sold divided by average stock of finished goods. Coming to debtors turnover ratio. Coming to, my dear lovable students, sir, when debtor will come? When I make the credit sales. When I make the, so credit sales divided by average accounts receivable. This is my resources. This is my resources. For example, if the credit sales I made is 10 lakh and average accounts receivable is 1 lakh, I can say that 10 times is the debtors turnover ratio. 10 times is the 10 times debtors turnover ratio means, sir, in an year, 10 times debtors has rotated. 10 times debtors has Abdina, sir, for example, on 1st of April, I start selling. Sir, 10 times, 360 days in a year. For example, 360 divided by 10 comes to 36 days. Correct? If I make credit sales today, I will get payment from debtors after how many days? 36 days. One round over. Then again, I will make credit sales. I will get money after 36 days. Second round over. Are you with me? If I make credit sales today, I will get the payment after 36 days. Like that in a year. How much time I made credit sale? 10 times. 10 times. If the turnover is more, means I'm getting quickly money. Tuck, 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 I'm realizing the money. Are you really with me? So debtors turnover ratio is equal to credit sales divided by average accounts receivable. Average accounts receivable. Comfortable? And if I make credit purchases, my dear lovable students, sir, creditors will come. Correct? Creditors turnover ratio means after goods supplied by the creditor, sir, within how much time I have paid. That is creditors, sir, payment period. Creditors, in an year, how much creditors has been rotated? That's what credit purchases divided by average accounts payable. Average accounts payable. For example, I have made total credit purchase of 1 crore and 10 lakhs, sir, for example, 5 lakhs is the average accounts payable. 1 crore divided by 5 lakhs comes to 20 times is the creditors turnover ratio. That means, hello sir, sir, if today creditors supply the goods to me, correct? 360 divided by 20 comes to 18. Within 18 days, I made the payment. Then again is supplied. 18 days, I made the payment. Again is supplied. 18 days, I made the payment. Again is supplied. 18 days, I made the payment. Like that, I have done this activity for 20 times. That is called as creditors turnover ratio. Creditors turnover ratio. Right, sir? If the same turnover ratio, if you express in days, it is called as, sir, holding period. What period? So the same thing can be ulta. You can say in the holding period. It is way of expression. Now, enna solrana, in an year, sir, 8 times is my raw material turnover ratio. 8 times. Or I can say that, sir, 360 divided by 8 comes to 45 days. That means once I purchase what material? Raw material. It is there in my store for 45 days. After 45 days only I will consume. So there is a blockage. There is a lockage of the raw material for next 45 days. Purida. So either I can say in times or I can say in days. If I am saying in times is called as turnover ratio. If I am saying days is called as holding period. So, raw material turnover ratio is equal to raw material consumed divided by average stock of raw material. Comfortable? Sir, I can say the same thing. I can say the same thing. For example, sir, what is give one example for raw material consumed, which is 10 lakh. What is a raw material consumed? That means 2 lakh is the average stock of raw material. Chumma example. So 10 lakhs divided by 2 lakh comes to 5 times is the raw material turnover ratio. This means, my dear lovable students, 360 divided by 5 comes to 72 days is the raw material holding period. That means if I purchase raw material today, I will keep the raw material in the stores. In the stores, it will be there for 72 days. So, inga paru, ingirundhu ஆரம்பிக்கும் 1st of April இருந்து. First once it over 72 days, we will issue to the factory. Then calculator 72 plus 72, 144. On the next 144th day, again second issue will happen. 144 plus 72, 216. On the next, sir, 216th day, we will third issue will happen. Sir, next one, sir, 216 plus 72, 288. On the 288th day, fourth issue will happen. 288 plus 72, 360. That's it. Year comes to an end. So 1, 2, 3, 4, 5. That's what 5 times is the raw material turnover ratio. Both are same. So if you are saying in the rotation turnover, that is called as raw material turnover ratio. If you want in days, you can say it as raw material holding period. Raw material holding period. Right, sir? The same apulta, திருப்பி போட்டா என்ன வந்துரும்? Holding period வந்துரும், which is nothing but average inventory of raw material. So you say the original formula. You say the raw material turnover ratio is equal to raw material consumed divided by average stock of raw material. Right, sir? Sir, let me ask you a very simple question. You are having 1 lakh rupees cash with you. 1 lakh rupees cash with you. Daily you are spending 5,000 rupees for your tea, coffee, rubber, this, that, etc., etc., etc. Hello, sir. 1 lakh divided by 5,000 means 20 days. No need to worry for anything. So you are having next 20 days money with you. Sir, எப்படி நான் போட்டேன்? Sir, the money available with me divided by cash expenses per day. Cash expenses, the same. What is the stock available with me? That's what average inventory of raw material. That's what average inventory of. That means I'm having average stock of, for example, 3 lakh rupees average stock is with me. I don't want raw material consumed because this raw material consumed will be for 1 year. Yes, sir. I don't want raw material consumed. I want raw material consumed per day. For example, here, if I take the cash expenses, it's for 1 year means 360 into 5,000 will come. Correct? I don't want the total expense for an year. I want the per day. That means, sir, raw material consumed divided by 360. Divided by 360. Correct, dane? Raw material consumed divided by 360. Then I will get the raw material consumed per day. Sir, can I bring the denominator 360 to mele? Yes, sir. எப்படி எடுத்துட்டு வரலாம்? 3 lakh into 360 divided by raw material consumed. Divided by raw material. Sir, like this also I can say. Are you really with me? Yes, sir. So, I will get the raw material in a period, holding period. So, listen. Once you understand one thing, all the remaining will be a cakewalk. Okay, don't by heart the formulas. Don't by heart the formulas. Getting the logic. Sir, with regard to raw material, I am going to find out the performance of the stores. I am going to find out the performance of the stores. Sir, if I want to say the performance in times, I will call it as raw material turnover ratio. If I want to say the performance in days, I will call it as raw material holding period. Correct? How I will see the performance? Raw material turnover ratio. Raw material turnover ratio is equal to raw material consumed divided by average stock of raw material. Comfortable? Sir, raw material, what period? Holding period is equal to, sir, average stock of raw material divided by raw material consumed per day. Raw material consumed per day. Raw material. For the entire question, assume 360 days, my dear lovable students. Hello, sir. Tell me, sir, can I assume that raw material consumed as 10 lakh? Can I assume that average stock is equal to 2 lakh? Like that, can I go? Okay, man. Sir, can I calculate the turnover? What is the raw material consumed? 10 lakhs. What is the average stock of raw material? 2 lakhs. So 10 lakhs divided by 2 lakh comes to 5 times. What is the meaning of 5 times? In every year, sir, 5 times I rotated the raw material. I rotated the raw material for 5 times. Ennachana, I purchased raw material, kept in stores. Hello, sir. Get out. Get out. In the sense means it went to the factory. Again, I purchased the raw material, kept in stores. Second time, get out. Third time, purchase the raw material, kept in stores. Get out. Fourth time, purchase the raw material, kept in stores. Get out. Fifth time, I purchased the raw material, kept in stores. Get out, year over. That means this activity I performed for 5 times. That's what raw material turnover ratio. The same thing. So, let me ask you a question. Between one time, how many days the stock was there in the source? That's what raw material holding period. So, between two legs of activity, நீங்க வாங்குனீங்க, get out பண்ணீங்க. இதுக்கு இடையில எத்தனை நாள் அது அதுக்குள்ள இருந்துச்சு? எதுக்குள்ள? Source-குள்ள. That's what raw material holding period. So, raw material holding period is equal to average stock of raw material comes to 2 lakhs, sir, divided by, sir, what is the raw material consumed? 10 lakh. So, 10 lakhs divided by 360 means every day I have consumed 1000, 2777.77, right? So, calculator, man. 2 lakhs divided by, please put the full figures, then only you will get the full answer. 2 lakhs divided by 2777.7 comes to 72 days. So, between one activity, one round of activity, raw material was there in the stores for 72 days. 72 days. The same can be find out by way of or. Sir, do you know raw material turnover ratio? How many time? 5 times. How many number of days? Number of days as per my example, 360 days. Right, sir? That means, my dear lovable students, sir, raw material in a period, holding period, is equal to 360 divided by raw material turnover ratio is equal to 360 divided by 5. Then also you will get 76 days, 72 days. Right? Which is nothing but, my dear lovable students, inga vaanga, sir, raw material turnover ratio is there. Raw material turnover ratio is equal to raw material consumed divided by average stock of raw material. Right up. Sir, raw material holding period is equal to average stock of raw material divided by raw material consumed per day. Raw material, or rather average stock of raw material consumed per day. Average stock of raw material, sir, average stock of raw material consumed per day. Clarity? Since the numerator is average, denominator also should be average. Right? So you tell me, very simple, man, how to find out the average stock of raw material? How to find out the average stock of raw material? Raw material consumed divided by 360 days. Right? So this formula I can rewrite as, hello sir, sir, raw material holding period is equal to average stock of raw material divided by raw material consumed divided by 360. Comfortable? This can be rewritten as raw material holding period is equal to average stock of raw material into 360 divided by raw material consumed. Right, sir? Are you really with me, sir? Sir, let me ask you a question. Is there any rewrite? Sir, average stock of raw material divided by raw material consumed into 360. Sir, pakka? Otherwise, it will apply only for the numerator. Ipu numerator than Elia. Ipu numerator than. But presentation is like this. Sir, my dear lovable students, come on, sir. What, sir? If I am having raw material, what ratio? Turnover ratio. Can I find out the raw material holding period by indirect formula? If this is how much time? 5 times, which is nothing but 360 divided by raw material turnover ratio, which is nothing but 360 divided by, what is raw material turnover ratio? raw material consumed divided by average stock of raw material. Are you with me? If I reverse this, 360 into average stock of raw material divided by raw material consumed. 360 into average stock of raw material divided by raw material consumed. Hence proved. Are you really with me? This is how it is working. Derivation of the formula. Are you really with me? So, in an year, my dear lovable students, how much time you have rotated the activity is called as raw material turnover ratio. Appreciate pandriya. In between two rotations, how much time the stock was there in the stores is what? Raw material holding period. Comfortable? Yes sir, yes sir. That's it. Sir, coming to raw material holding period in months, G instead of 360 divided by 12 divided by raw material turnover ratio. Raw material holding period in weeks, 52 weeks divided by raw material turnover ratio. Raw material holding period in days, 365 divided by raw material turnover ratio. Average cost of raw material consumed per day. Sir, raw material consumed divided by number of working days in a year. Are you all really with me? Comfortable? That's it. Come to WIP holding period, my dear lovable students. That means what I am going to check is, I am having 3 places in the factory, right? In that 3 places, my dear lovable students, place number 1 is the stores. Place number 2 is the work area. Place number 3 is the go down. Sir, I will purchase the raw material and keep in the stores. After I keep in the stores, I will issue this raw material to the work area. Am I right? Yes, sir. So, raw material comes to the work area. Sir, labor comes to the work area. Overhead comes to the work area. Right? Now is the work completed or work going on? Work going on. That is called as WIP. Once the work is completed from the work area, I will transfer to the go down as finished goods. Right? Sir, from stores, every dash, sir, every elements of production came to where? Work area. After completing the work, time, it gone out of the work area. How much time came in, gone out? Came in, gone out. Came in, gone out. This is called as WIP turnover ratio. Comfortable? Sir, the distance between the came in and gone out, that means how much days that item was there inside the work area is called as WIP holding period. எத்தனை நாள் அது ஃபேக்டரிக்குள்ள ஹோல்ட் ஆச்சு? புரியுதா? Simple, the same thing you can do the formulas. Sir, I'm not deriving all that. So WIP holding period, tell me average stock of WIP divided by average factory cost per day. Sir, it can be expressed even in what also? Months also. What is the formula? 12 months divided by WIP turnover ratio. Indirect formula. Yeah. WIP period in weeks na 52 weeks divided by WIP turnover ratio. WIP holding period 365 days divided by WIP turnover ratio if it is in days. Correct? What is the average cost of WIP? Factory cost divided by number of working days in a year. Right, sir? Next one, inventory velocity. I will use the word velocity. What, man? Velocity means the period for which the revenue from operation can be generated with the help of NI inventory maintained and expressed in terms of period. That means, enna inventory velocity na, sir, average inventory. Enadu? Divided by, sir, cost of what per operation? Cost of goods sold per day. Cost of goods sold per day. Cost of per day. What does this indicate? What do you mean by inventory velocity? How much days the inventory finished goods was there in the go down? So from the work area, what will come? Finished goods will come to the go down. From the go down, it will go out to the customer. To the customer. Vandichi, poichi, repeat. Vandichi, poichi, repeat. Vandichi, poichi, repeat. How much time vandichi pochungrada? Stock turnover ratio. Sir, vandu போறதுக்கு ஒரு டைம் எடுத்துக்குள்ள எத்தனை டைம் அது go down குள்ள இருந்துச்சுங்கிறதா inventory holding period. Sir, this can be find out. Inventory velocity can be find out by average inventory divided by average cost of goods sold per day. Or inventory velocity in months means 12 months divided by inventory turnover ratio. In weeks means 52 weeks divided by inventory turnover ratio, right, sir? Inventory velocity in days means 365 days divided by inventory turnover ratio. Average cost of NSR inventory means COGS divided by 360 days or number of working days in a year. Are you all really with me? Now, data's collection period or trade receivables velocity, right? Raw material you convert into WIP, WIP you convert into finished goods you will convert into debtors. Once I sell debtors today, within how many days my debtors are paying me cash? That's what debtors collection period. Debtors. Sir, debt collection period shows an average period for which credit revenue from operation remain outstanding. Hello, sir? It indicates rapidly or slowness within which the money is collected from the trade receivable. So, every debtors collection period, how you will calculate? Debtors collection period is equal to average trade receivable divided by average credit sales per day. Average. So, debtors collection period months le venunna 12 divided by debtors turnover ratio. Weeks le venunna 52 weeks divided by debtors turnover ratio. Days le venunna 365 days divided by debtors turnover ratio. எப்படி சார் ஆவரேஜ் கிரெடிட் சேல்ஸ் பர் டே கால்குலேட் பண்ணுவேன்? டோட்டல் கிரெடிட் சேல்ஸ் டிவைடட் பை நம்பர் ஆஃப் ஒர்க்கிங் டேஸ் இன் an year, right sir? Sir, creditor. What is creditors analysis? No, I am purchasing raw material from creditor. After certain point of time, I am repaying. So, how much time purchase repaid? This is called as creditors turnover ratio. After purchase to repay, I would have taken certain time. How much time I have taken? That is called as creditors payment period. Creditors payment period, which is nothing but average debt payment period is equal to average trade creditors divided by average credit purchases per day. அதே உனக்கு மந்த்ஸ்ல வேணும்னா சிம்பிள். டோட்டல் எவ்வளவு மாசம்? 12 divided by creditors turnover ratio, right sir? Weeksல வேணும்னா 52 weeks divided by creditors turnover ratio. If you want in days, 365 days divided by creditors turnover ratio. Sir, average credit revenue from operation means credit purchases per day means, sir, total credit purchases divided by number of working days in a year. Are you all really with me? Pakka, sir. That's it with regard to all the ratio. Within 5 minutes, I don't want the ratio. I want its analysis. 5 to 7 minutes. Can we quickly do it? Come on, man. Sir, I will say a ratio. I don't want current asset. Current ratio means current asset divided by current liability. Such by heart, I don't want. You say it is what on what? Current ratio. How much current assets I am having to meet the current liabilities? Quick ratio. How much quick asset I am having to meet the current liabilities? Absolute cash ratio. How much cash and marketable securities I am having to meet the current liabilities? Basic defense interval. Any ratio? Sir, quick asset divided by cash expenses per day. That means how many days I can survive. Not even 1 rupee come into my business. அப்பா அம்மா வீட்டுல இருந்து காசு அனுப்பலனா கூட அடுத்த 10 நாளைக்கு டீ குடிக்க பிச்சை எடுக்க வேண்டிய அவசியம் இல்லை. Are you really with me? What is working capital? Current assets minus current liabilities. Current assets is my investment. Current liabilities is the Urkara investment. Are you really with me? So my investment minus Urkara investment is what the working capital which I am net ready to invest. Are you really with me? Yes, sir. Coming to the leverage ratio. Sir, in your capital structure, liability side of the balance sheet, out of your total fund, how much debt is what the debt ratio? Out of your total fund, how much equity is what the equity ratio? Right, sir? The relationship between debt and equity is what the debt equity ratio. That's why debt divided by, sir, because of injecting preference share capital and debt into the what structure? Capital structure. The earnings of the equity shareholders increases. That's what gear மாத்தி போயிட்டே இருக்கணும். Are you totally with me? Preference share capital plus debt divided by equity shareholders fund. Comfortable, sir? Proprietary ratio. Out of my total asset, how much money is of proprietors? That's what proprietary ratio. Out of my total asset, how much is the debt fund? Is what the debt to the total asset ratio. Always fixed assets is connected with the long-term loan. So, sir, this out of NSR long-term fund, how much fixed assets I am having is what the fixed asset divided by long-term fund ratio, right, sir? Sir, I am going to serve the debt. In order to serve the debt means I have to pay the interest, I have to pay the principal. Sir, in order to pay interest and installment, how much earnings available to debt holders are there is what the debt service coverage ratio. In order to pay the interest, how much EBIT is there with me is what the Sir, in order to pay the preference dividend, how much PAT I am having is what the, in order to pay the interest and installment in cash, how much cash available with me is what the fixed charges coverage ratio. Are you with me? Sir, out of sales, how much is the gross profit is what the gross profit ratio. Out of sales, how much is the cost of goods sold is what the, out of sales, how much is the net profit is the net profit ratio. If it is taking profit before tax, it is net profit ratio before tax. If it is after tax, net profit ratio after tax. Right, sir? Out of sales, how much percentage is the financial expense is what the financial expense ratio. Out of sales, how much EBIT is what the operating profit ratio. Right, sir? That's it, sir. This I don't want. This I don't want. Sir, return on investment. Abdinale ratio return divided by investment. Right, sir? This return always we will express before tax and after tax, because on return we are liable to pay tax. Before tax means before food sugar test we are taking. After tax means after food, sir, test you are taking. Sir, what is the profit before tax? EBIT. So EBIT divided by capital employed. What is the profit after tax? PAT plus interest divided by capital employed. Comfortable? Return on equity means I am analyzing only from the angle of the equity shareholders. Equity means equity plus preference, right? Yes, sir. My dear lovable students, return on equity means what is the profit? Profit before tax? PBT, profit before tax divided by equity. What is the profit after tax? PAT divided by equity. Comfortable? My dear lovable students, return on asset. Sir, asset will generate EBIT. Are you really with me? Yes, sir. So the profit before tax is EBIT divided by average total assets. Whereas, sir, profit after tax divided by average total assets. Right, sir? Now I am coming to the performance. Okay, sir, companies having residual earnings. Hello, sir. For every shareholder, every share earned how much is what the EPS. Right, sir? Sir, this much I gave it as dividend. For this much number of shares, that means every share earned, how much dividend is what the DPS. What is the relationship between out of 10 rupees earned, if I distribute 6 rupees means company is having a dividend payout ratio of 60%. Sir, dividend yield and earnings yield from the angle of the investor. What is the return to the investor? Return is, sir, dividend. In order to enjoy the DPS, they have to invest the MPS. Sir, earnings yield means the return is EPS. In order to get the EPS, sir, they have to invest the MPS. Right, sir? Yes, sir. Sir, one share is having 10 rupees. Sir, yes, sir. What is a reflection in the market? That is what? Price earning ratio. Price divided by earnings. Sir, book value per share. Sir, asset minus liabilities is what? Net worth. That net worth divided by number of equity shares is what? The intrinsic value per share or book value per share. Right, sir? Sir, market value to book value means what is a reflection of the book value to the market is called as response ratio. What ratio? Response ratio. Response ratio means, sir, what is a response in the market to the book value is what the market value by book value. Right, sir? Now our turnover ratios. We can express turnover ratio in two ways, either in times or in days. If it is in times, turnover ratios. If it is in days, holding period. That's it. Sir, can I ask the raw material turnover ratio? Yes, sir. What does it mean? How much raw material consumed with the average stock of raw material? Right, sir? Sir, sir, WIP. What WIP meaning? Sir, with this much of average stock of WIP, how much factory cost I incurred? Right, sir? Finished goods turnover ratio. With this much average stock of finished goods, how much cost of goods sold I generated? Are you really with me? Debtors turnover ratio. With this much of average accounts receivable, what is my credit sales? With this much of average accounts payable, what is my credit purchase? Now here onwards, romba easy. Working capital turnover ratio, nothing. Turnover divided by working capital. Fixed asset turnover ratio, simple. Fixed asset divided by, sorry, turnover divided by fixed asset. Capital turnover ratio, which is nothing but turnover divided by, comfortable. The same can be expressed in what period? Holding period. Simple. Holding period is equal to days la venuma, days la irukku. Sir, months la venuma, months la irukku. Sir, weeks la venuma, weeks la irukku. Part venuma, part irukku. Fight venuma, fight irukku. Hello, sir. That means raw material holding period is equal to, sir, unmayana formula, average stock of raw material divided by average raw material consumed per day. Average. Right, sir? The next one, sir. Sir, WIP holding period is equal to average stock of WIP divided by average factory cost per day. Right, sir? The next one, sir. Finished goods in a holding period is equal to average stock of finished goods divided by average cost per day. That's it. Next one. Debtors turnover ratio is equal to debtors holding period. Holding period, collection period. We can't hold the debtor. Alright. Debtors collection period is equal to average accounts receivable divided by average credit sales per day. Basically, you want in days, average by average. That's it. Simple. Okay, wow. Sir, next one, sir. Creditors payment period is equal to average accounts payable divided by average credit purchases per day. Next one. That's it. Chapter ratio analysis revision. All the ratios we have done. Are you all really with me? For the next 10-15 minutes, go through, my dear lovable students, all the ratio. Then we will start a superb pass examination. RTP May 22 question number A. Then, sir, I will be solving that. After that, I will be solving RTP May 2021 question number N. And also, in the coming slot, we will be solving M question number M, A, N, M, RTP November 2022. I am waiting. Take 15-20 minutes time. Settle and come back. We will complete this revision. I hope that you are comfortable and enjoying.